Hello, Antok. Welcome to the Unicorn Emprise podcast, the podcast for PNG entrepreneurs earning 0 to 1 million plus kina in revenue in formal business who want to gain financial clarity, build business structure, and become tax confident. I'm your host, Vanessa Gaeta, a registered public accountant, CPA, and content creator here in PNG. I run my own accounting business called Hello Taxman here in Port Moresby, 100% online from my home as a wife and mother of 2 young kids. In this episode, we're tackling one of the most common questions that I get from formal SME owners here in PNG. How much tax will my small business actually pay? Taxes aren't exactly the most exciting topic, but stick with me here because understanding your tax obligations could save you thousands of kina every year. And who doesn't want to save more money to put into their pocket, right? The key thing to understand is this. Not all small businesses pay the same tax. In fact, there are several factors that determine exactly what you'll owe. Let's break them down. First up, your tax obligations depend heavily on how you registered your business with the Investment Promotions Authority, the IPA. Did you register a business name or a local company? This matters more than you might think. If you registered a business name, you're likely operating as a sole trader or a partnership. But if you set up a local company, you're operating as a corporation. The number of business name owners, the number of directors, the number of shareholders you registered also play a role in determining your tax category. So here's your action step. Pull out your IPA registration documents and check exactly what structure you chose. This is the foundation of understanding your tax obligations. Next, let's talk about your tax identification number, your TIN. Here's where it gets interesting. PNG actually has 2 tax regimes at the time of this recording, the income tax regime and the small business tax regime, or SBT. Now, a lot of people assume that because they're a small business, they automatically fall under the SBT or small business tax regime. But that's not how it actually works. The SBT regime only applies to sole traders who meet very specific conditions. So if you're a corporate or you're a company who is a small business, no, you don't fall under the SBT regime. Across these 2 tax regimes, there are 5 tax categories that you could fall into. And let's list them out here. First is the company or corporate income tax. That's CIT. 2 is the personal income tax for sole traders. 3 is also a personal income tax, but for partnerships. Then you got the small business tax for micro businesses. So that's SBT micro. And then number 5 is the small business tax for small businesses or SBT small. So which category are you in? Here's a tip. Take a look at your TIN certificate right now. It should guide you to identify your tax category. Now let's talk about the third factor, your business activities. There are 3 main types of taxes in entrepreneurship, and depending on what your business does, you might be liable for 2 or all 3 of them. First, there's income tax. This applies to all businesses, and that applies to the revenue or the income that your business earns from selling the products and services it does every year. So that's pretty straightforward. Hey, it's tax on income tax. Second, there's salary or wages tax. That's also a type of income tax, but this applies to the money that you pay for people who work for your business, including yourself. And these people, they don't own their own IPA registration. So you're an employee. And when you got staff, including yourself, you need to account for this. Third, there's goods and services tax or GST. In PNG, this generally kicks in when your business hits over 250,000 kina. Once you cross the threshold, you need to register for GST and start charging it to your customers. So keep a close eye on your sales figure. Finally, let's talk about something that could make or break your tax situation: the quality of your bookkeeping. This is honestly one of the most important factors, and it's something that you have complete control over. As a formal business owner, tax law actually allows you to reduce your taxes legally if you keep proper business records. So that means tracking all your income, all your expenses, keeping receipts, maintaining invoices, the whole works. But here's the flip side: poor bookkeeping can lead to paying more taxes because of fines and penalties. And trust me, you don't want to go there. Bookkeeping isn't a one-time thing, okay? It is an ongoing process, a weekly, actually, a daily, weekly, monthly, at least monthly process. It is your financial health check. The better your records, the more tax deductions you can claim, and the less tax you'll end up paying. And most of all, bookkeeping helps to tell you if you are financially secure, independent, and free. So, if you're not already on top of your bookkeeping, make that a priority starting today. It's an investment that pays for itself many times over. All right, let's wrap this up. So, how much tax will your small business pay? Well, as we covered today, it depends on 4 key factors: your IPA registration, business name or company; 2, your TIN registration, which tax category are you in out of the 5; 3, your business activities, what types of taxes apply to what you do; and 4, the quality of your bookkeeping. Are you keeping proper records to legally reduce your taxes? Knowledge is power, especially when it comes to taxes. So here's your homework. Go grab your IPA documents, grab your TIN certificate, look at what's going on in your business, and look at your bookkeeping systems. Episode number 8 is a great place to start with this. Okay, One Talk, thank you for listening to this episode. I'm your host, Vanessa Gaeta, and you were listening to the Unicorn Emprise podcast.